Hey, what's up guys? John here. BlackRock is getting ready to pounce on regional banks and even larger commercial banks. They're going after commercial real estate, residential real estate, consumer credit, and loans. It's pretty incredible what they're doing. I'm going to show it to you because they just made a public announcement 1 hour ago, letting the American people know what's going to happen next. Now, when I saw this announcement, I was looking at how this is actually going to connect to commercial real estate, kind of how this whole thing plays out, so we can make smart, well-informed decisions based on facts, not based on emotion. Facts are that 1 in 10 commercial properties in America will have to get refinanced over the next 2.5 years. 1 in 10. People are looking at the residential real estate market right now and commercial real estate thinking, hey, this is probably as bad as it's going to get. We haven't seen the storm yet. We're now seeing more money on the sidelines from smart and savvy institutions than we've ever seen before in history. When you have BlackRock doing what they're doing, it's worth paying attention. I'm going to break it down for you in this video. Please hit the like button. When you hit the like button, YouTube will share this content to educate more people about what's really going on. And if you want to fix your credit to position yourself for the greatest wealth transfer of all time, whether you have late payments, medical bills, you got foreclosures, bankruptcies, you have charge-offs, you have an issue on your credit report that's holding you down, we'd love to help you at greatcreditfast.com to position you for the greatest wealth transfer I believe we'll ever see. Greatcreditfast.com, go there, schedule a call. Take a look at this. So is this the start of reckoning for the estimated $20.7 trillion commercial real estate market? $1 trillion has to be refinanced by next year, $1 trillion, and $2.5 trillion by the end of 2027. So $20 trillion market, $2.5 trillion, basically 1 in 10. 1 in 10 properties are going to have to get refied. It's a massive, massive number. BlackRock sees huge opportunity in cast-off banking assets. They know Jerome Powell is going to continue to increase interest rates in the short term, and regional banks aren't going to be able to hold on. We're going to start seeing massive defaults, and this is a huge opportunity for them to run out there and essentially acquire the market. They're already sitting on $10 trillion in assets under management. I think that's going to be a drop in the bucket compared to what they have from now for the next 7 years. Higher rates, new capital rules are expected to spur sales. Regional banks are pressured to shrink their balance sheets. BlackRock Inc. is poised to become a bigger buyer of assets that banks unload to improve their capital and liquidity after concluding that the industry faces years of upheaval brought on by higher interest rates, stringent new regulations, and possible consolidation. Possible? Definite. It's guaranteed we're going to see consolidation. We already saw J.P. Morgan Chase acquire one bank. That's nothing. We haven't seen anything yet. A lot of people still think we're in a huge bull market. Everything is going to just go back to normal. And once that whole psychological shift happens, then we're going to start to see more and more panic, more uncertainty. We're going to see consumers pull more money out of banks. There's going to be more pressure on small regional banks. Gary Sheldon, a vice chairman of the world's biggest money manager, is leading efforts to position BlackRock's funds as source of capital. So BlackRock's funds as source of capital for banks looking to sell asset-backed securities or larger portfolios of consumer, commercial, or residential loans. Now, people are even looking at residential real estate right now like, hey, I got to run out there and buy a house right now. Now, look, you can find good deals in all markets. But in this type of market, you got to really make sure you're buying a deal, something really well priced, something priced that gives you a margin of safety. If the market drops 30, 40%, you can still find an exit. You can still leave without not losing your pants on that deal. I believe you're going to start seeing BlackRock and you're seeing these companies do what they're doing for a reason. Blackstone, for example, raised a $30 billion real estate fund, the biggest in world history, and they're getting ready to deploy it in residential rentals. You have to ask yourself why. Probably because they see massive opportunity. Why is BlackRock doing this? Probably because they see massive opportunity. If some of the biggest pockets in the world are sitting on the sidelines with endless amounts of money, talking about big opportunities, it makes sense to kind of pay attention to that, right? It's not fear-mongering, it's true. It makes sense to pay attention to that. Fed set to propose new banking requirements, Basel III Endgame. This came out today, about an hour and a half ago. Fed officials are set to unveil an overhaul of banking requirements known as the Basel III Endgame. This week, American banker staff writer Kyle Campbell sits down with Yahoo Finance Live to explain the ways in which these guidelines will mitigate risk differently. For various forms of credit lending, Campbell describes how these new guidelines will impact certain larger institutional banks while examining the exposure for regional banks may have to commercial real estate. It's going to be more regulations, which are going to put more pressure on these smaller regional banks. It's going to give more opportunities to these larger banks, because many people are going to say larger banks, they have deeper pockets. There's less risk there. With a small bank, there's a higher chance that they're not going to have the minimums. They're not going to be able to float through a storm. People are going to start pulling more and more money away from these regionals. Unfortunately, because I love regional banks and I love these credit unions, and these small banks are extremely important. It gives Americans opportunities to where they don't have, these large corporations don't have monopolies on the American people. But it's looking like that's going to happen. We're going to see mass consolidation. For U.S. regional banks, commercial real estate is seen as the next big worry. Now look at this. Compared to big banks, small banks hold 4.4 times more exposure to U.S. commercial real estate loans than the larger peers, stated a new analyst report from J.P. Morgan Private Bank. Within the cohorts of small banks, CRE loans make up 28.7% of assets, 28.7%, compared to only 6.5% of big banks. That's shocking. More worrying, a significant percentage of these loans will require refinancing in the coming years, exacerbating difficulties for borrowers in a rising rate environment. The separate Citigroup analyst found that banks represent 54% of the overall $5.7 trillion commercial real estate market, with small lenders holding 70% of commercial real estate loans. More than $1.4 trillion in U.S. CRE loans will mature by 2027, with approximately $270 billion coming due this year. Now, this year, $270 billion, $1 trillion over the next 12 months, $1.4 trillion by 2027. But that number is conflicting, because what they are saying here is $2.5 trillion by the end of 2027. This is Market Watch. U.S. banking crisis close to 190 banks could collapse, according to study. Now, I believe Jerome Powell is going to keep interest rates elevated for longer than most people are expecting. And I think that that's going to push forward this mass bank consolidation. And I also think it's going to push into a completely different lending environment. That's what I think is going to happen. I think we're going to look at 2008, 2009, 2010. What happened? Banks tightened up lending aggressively, especially on subprime and lower credit score borrowers. They want to take risk off the table. Banks are going on a diet. Regional lenders are cutting back on some lending to preserve capital. This came out yesterday, July 24th, also yesterday. Regional banks cut back on lending to preserve capital. Also yesterday, U.S. lending meltdown shows a big investment slump is underway, economists say. This is what's going to happen. We're going to see massive tightening of lending nationwide. Also yesterday, regional banks need to adjust to a new financial services ecosystem. Again, yesterday, FDIC scolds bank for manipulating deposit data. Lenders lowered their unsecured deposits by nearly $200 billion after bank failures. And this is what we're going to start to see here. There's going to be more bank failures. This is warning by FDIC Chair William Isaac. So when people look at this information, I believe there's two ways to look at it. One, you could ignore it and say, it's probably not going to happen. We've been talking about a crash. People have been warning about a crash for the last year or 2 years. And I agree. It's been crazy. The last couple of years, we probably should have seen a crash. But you have to also take a look at some of the things that have happened over the last couple of years that no one really could have anticipated, just in general. They printed 40% of all dollars since 1776 inside of the last 3 years. That's pretty insane. Mortgages, they had forbearances. Evictions, they had moratoriums. Utility bills were on pause. Student loans are still on pause. They printed endless amounts of money, and they put this money in the hands of small businesses, large businesses. They basically painted out this false sense of security in this economy. Now they're changing that entire economy. So the big question is, are they going to do it again? And if they do, can it really last? The answer is no. I don't think the answer is going to be yes. I think we're going to start seeing more countries de-dollarize. I think we're going to start to see some really big changes happening in the U.S. economy that a lot of people aren't ready for. But I also think inside of massive change comes massive opportunity, and the real money is made when the masses are afraid. And I think soon the masses are going to be afraid. And that's the time when you want to be extremely bullish. You want to have cash, a good business, great credit, a game plan. That's what you want. You want to put yourself in a really strong position. But back, when in 2008, 2009, 2010, when it was the perfect time to invest, everyone was too afraid to invest. People were like, I want to wait for the market to drop more. When the market really crashes and everyone is panicked, that's when you want to go out there and invest. When you hop into an Uber and the Uber driver is telling you to flip houses and to buy NFTs, it's probably when you probably want to stop flipping houses. You probably want to sell off your NFTs, right? I think we're stepping into this big shift economically. And I think that these large institutions like BlackRock and Blackstone, these companies, they know it, and they're going to start acquiring so many properties. There was even an article from CNBC saying that 30% of all residential homes in America will be owned by corporations, large corporations, in the next 7 years. I think that's an understatement. That's what I think. I think it's an understatement. What do you think? Drop it below. Let's have a conversation about it. Hit the like button, add me on IG. And if you want to fix your credit to position yourself for the greatest wealth transfer of all time, we'd love to help you, give you a free strategy session at my company, greatcreditfast.com. That's greatcreditfast.com. Go there, schedule a free strategy session. We'd love to see how we can help you. I'll catch you guys in the next video.